everybody, this is the Trading Champs and I'm Dr. Sasha with you. Let's discuss gold for the upcoming week. And here we are with the weekly chart on gold. You all can see here that last week we clearly broke out of this trendline resistance and price was consolidating in this area, making higher lows and lower highs. Finally broke out of it, and then we closed last week somewhere around 1903-ish area, respecting these two peaks, right? Then what happened with the Ukraine and Russia crisis? Price just shot up all the way to this area, which was the resistance, weekly resistance around 1916-17-ish area. And also it just dropped back sharply and closed below this resistance that we have on 1904-ish area. Now, this is here we are. What I can see on this chart here is that above 1960, we can be bullish, very, very bullish. And then we have this support right here, 1765, where we can be extremely bearish, right? And this is the consolidation area. Fed wants to control the inflation, whereas Ukraine and Russia crisis can increase the inflation. This is the daily chart on gold. Looking at the daily chart, I can simply say that price shot up to 70 level and then dumped down all the way. And it dumped down, came back to this breakout structure retest right here to 1879-ish area. And then very quickly retraced back around 400 pips to come up to the 1903 area and close. Next day, we had another bearish candle. Now, another thing that I am looking at is if we fib this leg to the top side, it has already retraced to 0.236 area right here. And now next is around 1860. That could be 0.36, 0.382. And then we have 0.5 level, that is 1826 level. And it's very clear that we have this support, 1765, and below this, of course, we have this level, 1678, for the lower levels to the downside. This is the 4-hour chart, guys, and you see how we tapped up, rejected on 4-hour candle, absolute bearish candle, and then retraced all from here to 1902 level and closed. Next day, this was a 1-hour OB on the left-hand side. So it retested the order block, dumped down, double top, and then dumped down further. This was London, and we came back down, tried to create some support in this area. And this is the same area, right, on the left-hand side, previous support on gold. But above 1960 area and further up, if we are coming to retest and close above this area next week, that means that we can be looking new highs, even more than 2000 level. And otherwise, if we are going to reject below this and continue downwards, then you know where the support is. So first, we could be looking at the 50% around 1820-25-ish area of the fib retracement. Below that, we have 1760, 1677, and even 1600, where price could be finding support, right? Right now, I look at this as a horizontal support right here. 20 to 25 level. And this is the 50% fib retracement to the top side for this current leg. This is your 1-hour chart on gold, guys, and you can see that price on 1 hour has been supported by this blue trend line. And it's been supported multiple times in this area here. And you can see last week we were trying to find some support at 1888-ish area before the push to the top side. But on the way back, the momentum was so huge that it couldn't be respected anymore and dumped down lower to 1878 area. And now we are looking at roughly around 1880 level as a support here. If this support is broken, then you could be expecting gold to come down, and on the retest we can be looking for a sell setup, right, to the further lower fib levels. I think with all this setup, keeping this in mind, Ukraine decision will be made before FOMC March meeting. And if interest rate has been increased up to 20% due to Ukraine crisis and so, then gold could be really, really dumping down all the way, maybe to back to 1670 area, further deeper down that to even 1560-ish area that we have on. I'm going to have a quick look at the news next week. So Monday, it's Chicago PMI. So one thing is very clear, guys. Due to the crisis that we are into, Russia and Ukraine, expect anything any day. I see that on Tuesday, Wednesday, Thursday, Friday, all 5 days, we have red folders. So it is ISM Manufacturing PMI. And Wednesday is ADP non-farm employment change. FOMC member will be speaking, and then rate. This is Canadian, and then Fed Chair Powell will be speaking. Thursday, we have unemployment claims again, and then Fed Chair will be speaking, testifying, and ISM Services PMI. Friday, average hourly earning, non-farm employment change, unemployment rate. So as you can see, Friday and Thursday especially, very, very volatile. And Wednesday also have important news on Tuesday the same, and Monday as well. Other than that, considering Russia-Ukraine situation, please be very careful and have your stop loss tight, small targets, and trade safely. Before looking at some of the important levels to trade next week, we know that Putin has been targeted by West right now, and financial sanctions have been placed on Russia. US cannot afford more inflation at all. So these are the important points that you should be keeping in mind while trading, and keep an eye on the news. If price is going to respect 79.80 area here and push to the top side, we can look for 1903 and then around 1920-ish area, right here where there was an OB earlier and we retested and rejected it once before. And then continue again to the breakup structure retest around 1935 or 40-ish level. Above that, I see 1950. If it's going to reject 1950, then expect it to be bearish again. It could be bearish from this level all the way downwards. And on the way back, we are again going to be looking at 1920 level number one, number two, 1900-ish level as a support, and then coming back down to 1980, then deeper, you know that 50% retracement will be somewhere here, and below 1850, below this level, it could be a quick dump down to this area. And overall, I do not expect gold to, in March, to break 2000 level or even break 1800 level. None of them. So I'm expecting it to be ranging in this area and then see how FOMC in March will play out, and we see the effect on interest rate, and then decide which side and how price is going to be. So best is to trade level to level and try to catch reversals and look for the reversal patterns that we usually look at. This was the best week for my trading, all the way to the top and then coming all the way back down. Took full advantage of this volatility. And I had amazing runners from the bottom, as you all know. And those runners paid me very well all the way up to this level. Alone, this drop down was 1,000 pips. And this push up from this level was a 600 pips. Retracement from the bottom to this level was 400 pips. So we are talking about 2,000 pips in a day, which was way too much. All you have to do was be in the right direction and then let your runner do the job for you. Thank you so much for listening to the video, guys, and stay tuned. I think my social media links and everything is in the description. Feel free to ask me any questions and if you need anything from my side. And stay safe. Take care of yourself.